Welcome to TheoTrade. This is Don Kaufman. It's June 25th, 2018. You are watching the Theo Night video. With just a few minutes left in the trading day, well, we're seeing what could be the beginning of, once again, some decent volatility back in the marketplace. You know, a lot of people emailed me today saying, is this it? Is this the beginning of the end? People, I'm not even sure it's the end of the beginning. I mean, come on, the S&Ps today slide by 1.3%, and yet lots of people believe it's the end of the world, you know, in terms of the markets. Well, we're going to discuss that a little bit on this video. We're also going to discuss a bit about a couple of positions I've taken, a few positions I've put on, and a ton of positions that we've taken off, many of them which, of course, have been profitable. With that, let's get started in the S&P futures. So the S&P futures, if you see a line across your screen, you're not seeing things, that happens to be kind of a key inflection point. We actually call it a gravity point here at TheoTrade, and that gravity point sits directly on 2731. Now again, 2731 happens to be a point into which we would believe that the marketplace would probably come right back into. Again, note that with just moments left in the trading day that we're actually fairly close to that gravity point. It wouldn't surprise me by any stretch of the imagination to see us come back up to the 2731 in some of the overnight trade. Now, if you're kind of curious and you've been following us for quite some time, where are some other key kind of inflection points, again, what we term gravity points? And I think these are of critical importance, especially in a time when we're starting to see a bit more market volatility. So some of these points, and again, I'm going to label them, as I just mentioned a moment ago, we are sitting just south of this 2731. Down below that happens to be 2682, and all the way down here is 2626. So those are major, again, S&P futures, what we'll term gravity points. That's where trading firms tend to have kind of concentric risk, and the marketplace will ultimately be driven directly to that. Do not think of it as support and resistance, but rather a point into which the market will be dragged into. So with that, okay, where some damage was done today, clearly on the technology side of things. I mean, let's point out a little bit about Netflix. Now, listen, Netflix on a year-to-date percentage just 2 days ago was up about 110%. It's now only up 90%. And that's where I say, you know, come on, we're just scraping the surface and seeing a little bit of volatility in here. Nevertheless, before we go any further, I think it's also important to discuss what positions we still have on, okay, and what we do not currently have on. Now, today was a fairly active trading day for me in particular, but I want to update you on a couple of positions that we took on and a couple of positions that we happened to take off. First and foremost, let's talk about the Nasdaq. So last week, and you can see the initiation of some of these trades, when I bought them, when I sold them, and again, we're going to look at credits, we're going to look at debits, okay? But when we start to go through a couple of the trades here, just kind of follow along. Some of you may have these positions on, and if you don't have some of the positions on, fantastic. We're actually going to look at a couple of positions that you could possibly be putting on today, tomorrow. One of the first things that I want to mention, this is the QQQ. Again, it was last week. Last week I discussed taking a fairly bold position and getting short the Nasdaq. Well, that position, we're now out. Okay, so we put on an in-out spread in the Nasdaq last week. We've now actually closed that, and quite profitably on that trade. Trade is in, it was up in excess, again, in excess of 80%. So the Nasdaq trade happens to be closed. The Netflix trade, we have a profitable trade inside of Netflix. The Netflix trade was also positioned last week. We have a position that's been on for a while in XHB. It's the home builders. Bearish position in there has been closed, okay, for over a 55% return. Now, what you're looking at here inside of Intel, these happen to be rolls. Okay, those are duration positions. I've also gone ahead and rolled the Boeing position. For those of you, again, I've got bearish positions in Intel, bearish positions in Boeing. One of the great questions that came up today inside of the TheoTrade chat room, and I'm laughing about this, is there's the closing bell. Somebody asked me, Don, when would you consider getting out of Boeing? And the answer comes, yeah, when it's down here. All right, and where is here? Let's be really specific, and I'll actually snap back to the 3-year weekly. Yeah, call me when we're down at the low 200 kind of range, but there is no way, shape, or form am I anywhere near an exit in terms of the Boeing position. So again, that is what we term, both the Intel and the Boeing positions, what we term duration positions. You can see I closed out the QQQ positions in chunks. I tendency to route one contract, maybe route a couple later, a few more later in the day, really kind of probing for price. And that's one of the reasons I like to point this out. It's a fairly volatile day. I had a bearish position in Tesla. We're out of the contest. So there happens to be an in-out spread in the Qs, an in-out spread in Netflix, an in-out spread in Tesla, and all of those have been closed profitably in excess, again, in excess of 55%. And the QQQ position actually made about 83%. Now, you'll also see some positions here in Costco and Lulu. Well, let me actually take you a little bit into the Costco and Lulu trades. First of all, we'll start here on the charts, the most unlikely place for me. As you guys might know, I am not a big market technician. So why a position? First of all, why a position inside of Lulu? And more appropriately, you may be asking, why did I take a bearish position inside of Lulu? Well, one of the first things I want to point out is that Lulu today happened to end up 0.5% with the rest of the market down, okay, over a full percent in the S&Ps. So here's a position that, if you think about it this way, okay, the marketplace today fell, okay, and again, about 1.5%, right? Just into the close over here, we saw some pretty good sell side activity. No big surprises. Again, we'll discuss a little bit more about the S&Ps in general here in just a moment. But I want to get through this position. So here in Lulu, so we have a marketplace today that, if we look specifically at what we term advanced decline line, and when I pull up advanced decline line, I like to pull up the S&P 100. This still kind of reeks of a fractured marketplace. Now, I talked about a fractured marketplace in this weekend's video, and what that effectively means, people, it is incredibly rare. In fact, I can actually count on one hand, the number of times that I've seen the S&P down 1.5%, yet I've only seen what? Less than 80 decliners. We're not seeing full-blown correlation. We're not actually seeing the market cave in on a sector-by-sector basis. That actually means there's still pockets of strength in this mess. And the strength is coming from an incredibly unlikely kind of candidate. All right, utilities doesn't surprise me, because utilities can be considered defensive. But over here, consumer staples, really? Okay, when all else fails, let's buy Walmart. I mean, Walmart's up almost 2% today. Target's up 1%. And some individual brands, and this is like really discretionary spending, okay? Individual brands like Lulu happen to be positive on the day. In this particular instance, I took what is called an in-out spread, all right? I bought the 126s, I sold the 124s. Now, I was able to route this trade all day long for right around $1 debit. In fact, you can see, well, here, let's detach this for just a moment. This happens to be my order book, and it was a fairly active day. All right. In fact, I'll expand that out. It's even off the bottom of my screen over here. But when I say it's a fairly active day, yeah, we're not joking. All right, lots of cancel replaces, a lot of firing of some one lots. That's what I do when markets get volatile. So this in-out spread, I wouldn't pay more than $1 for. It happens to be effectively a bearish trade, and I routed a number of individual contracts into it. I'm looking for a 55% return. Enough said there. Next one on the docket happens to be Costco. Now, why take a bearish position in Costco? Very similar reasoning. Okay, this thing happens to be absolutely unscathed. Is it the last thing on the planet that anybody is going to be selling? Quite possibly, but guess what? If the marketplace is going to see continued sell-side activity in the days to come, they're not going to hit some of them. They're going to hit them all. And that's what that means. That's why I look at correlation. I never make a decision in the markets. I never make a decision in the market based on one underlying product. For example, the decision I'm making here in Costco, okay, sure, it has a lot to do with Costco. But in the end, it has everything to do with the fact that the marketplace isn't seeing full-blown correlation, and that ultimately, if markets are going to see continued sell-side activity, they will hit underlyings, okay, without discretion. And that's why, again, I want to build a little bit of a short position inside of Costco. Now, let's step away from some of the individual positions. By the way, here in Costco, again, it's just an in-out spread, right? I'm not getting cute. The one in Costco happens to be a $5 wide spread. Purchasing the $5 wide spread, anything right around this $1.86 credit. Again, I'm purchasing the 212 half, okay, and selling the 207 half, okay? For under, you got to pay under, in this case, about $2 for that particular spread. All right, let's go close that up. So now let's just take a quick glance at the market as a whole. As I said, people are emailing me all day. Is this the beginning of the end? And I really think you have to look at this with some perspective. It's, again, maybe just the beginning of some sell-side activity. Clearly, I've anticipated sell-side activity for quite a long period of time, and one down day, and I like to reiterate, one down day doesn't constitute much of anything. One of the things I like to put into perspective, 40 some odd points in the S&Ps may sound like a lot, but here's the reality. Now we have a $2,700 product. It's only 1.5%. Things don't even become what we'll term quote unquote statistically significant until you're in excess, okay, of about a 3% move. Now, don't get me wrong. The Nasdaq was really striving today to make that 3% move, but it bounced back up. And sure, there's some individual products, okay, that kind of took it on the chin a little bit today, like, for example, Amazon, which happened to be the object of our affection in this weekend's video. Nevertheless, let's look at this as just a scrape to the surface over here. And, ultimately, and I'm going to leave you with one of these thoughts. So went through quite a bit today in terms of opening some positions, closing a lot of positions. Okay, we talked a little bit about levels over here, but I'm going to leave you with one really key thought, and that's this. Okay, when the marketplace is done, all right, you're going to know it. And when I say done, I'm talking about the dip buyers. When the dip buyers come out, and it's almost like clockwork, and people are literally looking at their watch and like, well, it's time for the dip buyers to come out. How are you going to know? Because the only way that this dip buying is going to end will be in pure shock and awe. And that happens to be moves 5%, 7%. You'll know it when the dip buyers are forever gone, because they're going to be knocked back so hard in such a violent manner that they will not, okay, be there to support buy-side activity thereafter. With that, hate to end on kind of a down note, but thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.